Dude, you left the trading bot on again. It doesn't matter if there's a new watch. We've been over this a million times. If you leave it on past 54 minutes, it's going to get picked up and it's going to get shut down. Look, 2 months ago, you wanted a yacht to impress your girlfriend. Last month, it was a vertigreen Ferrari. Yeah, and I don't want a cellmate named Honeycrisp. Shut it down. I've been developing my own bot for 2 years now. This is a monstrous task. The idea was simple: create something that could kill all the other bots out there, take my science and put it into a bot that could trade my work and crush the markets, destroy everything out there and make it all useless, right? You have so much to consider, by the way, when you're trying to develop a bot. You have algo bots to consider, you have quant bots, you have arbitrage, you have breaches and security hacks, you have calculators from exchanges that affect the price, you have indicators, signals, you have so many things that you need to actually conquer when you're developing a trading bot. It is unworldly. Unfortunately, this didn't quite work out. My bot went from early development concept, so just initial idea on pen and paper, so conceptual development, into production, into testing, into an alpha stage, into an early access stage, into a beta stage. It had all the makings of something that was great, but I just simply wasn't happy with it, and I couldn't get it to a point where I thought this would be something that I would trust forever. Would it work sometimes? Yes, brilliantly. It would work like magic. This thing would kill it completely. Did it have its flaws? Of course. Ultimately, like I said, I couldn't quite trust it. When I think about my science and trading, it is so accurate that I can usually pick levels and coins and pumps and moves and all these things like that. I can usually pick them to the dollar or to the cent or whatever. People have seen me do it a million times, so that's not any news. But to actually get a trading bot to do that consistently is nearly impossible. So I was able to learn absolutely everything there is to know about bots, where they fail, where they succeed, how they work, all the ins and outs that you would want from somebody who's developed something for years on end, the intricacies and the ins and out of a bot. I got to learn all of that. So it's very cool because it allowed me to kind of take a broader look on the entire industry of trading bots. So now I've been able to see where they're awesome and where they suck, and I can share that with you guys now. So this is quite a complex video. We are going to need to break it up into multiple parts. So I'm going to do my best to break this into different segments and kind of maneuver in and out and massage through these things as I talk about them so people can follow along. Because again, this is a quite intricate topic and there is a lot to talk about and a lot of different angles and interconnecting pieces that people wouldn't otherwise see unless they've actually developed this on their own. So the first piece we're going to talk about is how a bot is derived, the knowledge it gets. So kind of you can think of this as the knowledge layer. Every single bot, no matter where it is, kind of starts on paper with an idea. Let's make a bot do X. Let's either trade an indicator, or let's trade a signal of some type, or let's use these types of levels to market on the trade. So this pulls back to, again, the knowledge layer. This is the layer where the information is taken from the trader responsible for making the bot succeed, and able to take that information that they know and convey it to a bot to actually execute these trades. So again, this knowledge layer is largely based on the trader. So I need you guys to think of this layer as the information that comes from the trader and goes into the bot. So the bot's entire existence is dependent on how good or not good a trader is. So the very first conceptual layer of, okay, this is the knowledge layer, where's this information coming from, is completely reliant on how good of a trader it is. If you had the best trader in the world, they could, in theory, make an amazing bot if all the other layers added up. As you go down the layers, if you had a mediocre trader trying to develop a bot, that bot would there have mediocre information to work with. Low-level trader who was developing a bot, well, you'd get low-level information. So you can kind of see this as where the trader is feeding the information to the bot. This is the starting point, and if you were to put a line across how good as you go up or how bad as you go down this bot could be, once you start with the trader, that point where you start with the trader, it can never go up from there. The information that comes thereafter, the knowledge layer, it can never increase. It can only decrease as flaws are introduced. If you have the best trader in the world, but you have bad coding, well, you would start to get a degradation in the bot's performance. If you had the best coder in the world, with the best data in the world, with the best of this, and there was a security breach, well, guess what? Your information would go down thereafter too. So where the level of trader comes in and the knowledge layer behind that trader is kind of point A, where you start thinking about, okay, how can a bot work? And that point A has to be the highest point. You can't take data and you can't increase the knowledge that's coming from the core layer. So this is very much the heart of the entire trading bot, is the trader behind giving it the knowledge. So the next piece of this thing is taking that knowledge and putting it into data. So actually conveying what somebody sees in their mind or what they can draw on charts. So you guys can already see where the flaws are starting to come in. Knowledge layer, traders, what they think they know and what they don't know. Putting that knowledge into data is the next layer. So you have a trader, they have knowledge, putting that knowledge into data. Well, we're going to break that down and talk about it and why it's so difficult. We are going to create a hierarchy now from taking the knowledge into the data, and we're going to create a hierarchy of kind of the level of information it could receive. So at the very bottom of the list, at the very lowest level, you would have signal receivers. So this type of bot receives signals from people, and people will say, okay, execute this trade here, and then that will just basically give signals out to the market. So an example of this would be somebody has a bot on Twitter or on Discord or any kind of social media, Telegram, it doesn't matter. They would basically have a bot and they would tell the bot what they're buying, and that bot would just go and spam 100 signals to all these different channels. So this really isn't bot trading at all. All this is kind of signal generating and using some fancy script to basically deploy a bunch of information to the web saying buy here, sell there, but it's not really independent. It's manually controlled by a trader behind the scenes. So we call these signal bots. Immediately, the first thing that comes to my mind about signal bots is how flawed they can be, because again, you're not really using a bot to trade. You're just having basically a text bot tell you what to do. You are relying on the traders behind the scene. Now, sometimes this is run by one trader. Sometimes this is run by many traders. Again, you can immediately see the problems here. If it's run by one trader, that trader has to be really, really good. They have to be amongst the best in the world to be even qualified to be telling other people what to do, which, by the way, they shouldn't do anyways. They should just keep it to themselves or try to teach it. The second part of that is a group of traders. Well, this is like putting 10 alpha males in a room, all with different opinions about the same topic. You guys know how well that works out. Too many cooks in the kitchen, as they call it, and you get a soup that's, well, I don't know who's eating it. So that's the problem with signal bots, is it's either one person or a multitude of people, and those problems are kind of, self-explanatory. They speak for themselves. Next on the list, and this one is my favorite because this is what everybody knows about, indicator bots. This is your common standard 99% of the stuff you see out there, the indicator bots or the arbitrage bots. We'll get into arbitrage bots after, actually. We'll just stick with indicator bots for now. This is the next on the list, as basic as it gets, is an indicator bot. You simply have the crossing of a whatever, MACD, RSI, moving average, a combination of these things. No matter how advanced these bots get, they can be back tested, by the way, which we've done for years, developing our bot, back testing all this information to make sure we weren't missing a single heartbeat on this thing. You could have something as basic as a moving average bot where it's programmed to buy a cross of maybe a 7 over a 25 moving average. So something very simple. Or you could start to dive down that rabbit hole and you could say, okay, if it crosses a 7 to a 25 on this time frame, but then that next time frame maybe also cross this specific time frame. So if it's doing A, B, C, D, and E, then you should send a signal to buy. That would be still considered extremely basic. You could then take that, what some people would think is complex in terms of actually trading, going down the rabbit hole of all these indicators, crossing all these very specific patterns that someone tries to amalgamate in their head. And you could introduce now all of a sudden RSI into it and MACD, and you can make confluence amongst all these indicators. And this is still very low quality thinking in terms of bots. They are buying way too high. They're typically taking a ton of risk. They are essentially giving you pretty dirty data. That's a term that we use, dirty data, in developing the bot. It's just kind of like dirty data is just bad information, whether it's just visual pollution or whether it's kind of just screen garbage or nonsense, high risk. I just refer to it as dirty data. These types of indicator bots do nothing but spew pollution and dirty data. And let's stop the bot talk there and talk about indicators for a second. Indicators are useless because our charts in day trading, as a top level trader, I have seen this all my life. For over a decade, I've seen this. What happens is things change slightly and surely over time. Things constantly evolve. There's something that I've created called comparative analysis, which is the architecture and the way the chart is developed in the moment. that kind of helps the higher level day traders make these decisions in the moment. So there's data out there that's communicated on the charts. We call them data points in Butterfly Effect. There's data points on the charts, and these data points, they communicate very specific ideas. And these theories and ideas, while they all mean something different, if a level is hit in a certain way, it means X. If a pullback happens after a certain level is hit, it means Y. So there's very specific data that's communicated on the charts. It's what you get to when you peel back all the layers of day trading and you get to some of the more advanced stuff, some of the highest level stuff that you can find. So the problem with indicators is all they're doing is reading data averages from the past. So all they do is they take an average point, and I talk about this in Future of Trading. So it's actually very easy to break down like moving averages and RSI and MACD. It's actually very easy to not have any of them on your screen, and you can calculate moving averages on your own. You can manually calculate divergence and RSI and MACD. You can manually calculate all these things, by the way. So the problem becomes this, is they are taking points of averages and they are just using them to relate data. So these averaging points in the charts, they simply don't work because the average points are created from the actual points. This is the top and this is the bottom. Well, what happens is all of these indicators are reading the data between those 2 points to spit out information. They can never see where this point exists and they can never see where this point exists because they're simply reading averages between those 2 points. That's the problem with indicators, is that they read averages, so they give you dirty data. They don't give you the actual spots where you're supposed to buy, the actual spots where you're supposed to sell. They just give you the data where they assume these things to be correct. But those assumptions can never be correct that indicators make because those moments aren't decided until they're actually happening in the chart architecture. Again, I call this comparative analysis. It's the next phase of day trading. It's what happens after technical analysis. And when you get to a higher point in day trading, you get to comparative analysis. So again, this is the chart architecture, and it simply can't be seen until the data points are created in the moment. Okay, next up on the list would be algo trading, quant trading, arbitrage, some of these different things that would be kind of considered a little more advanced than maybe an indicator bot. We're going to read this right off the web. Algorithmic trading is a method of executing orders using automated pre-programmed trading instructions, accounting for variables such as time, price, volume, and the trading attempts to leverage speed and computational resources of computers relative to human traders. Boy, this sounds just like what we just talked about. Algorithmic trading is nothing but indicators that are tried to be developed into trading bots. So they take this idea of indicators and kind of how we just explained it, how indicators are getting more complex and compiling more junk on top of more junk on top of more junk. And then they call it algorithmic trading because all of a sudden it's using an algorithm to trade with. Well, these algorithms are completely fictional. They're just something that somebody picks. I could take SMAs mixed with RSI, mixed with MACD on specific time frames and have a very defined convergence factor. And I could call this an algorithmic trading bot. This is no different than just piling on a bunch of garbage. If you put dirty banana peels with dirty orange peels and then put dirty lemon peels with half-eaten watermelons, it's still garbage no matter how much eaten food you give it. This is kind of the same way to think of algorithmic trading. It's dirty data that really doesn't make sense from a point of origin where it actually comes from. So when you think of, oh, let's use an algorithmic trading bot, well, I think you know the answer to that and why it's not a good idea. Next up on the chopping block. I love this video so far, by the way. I get to put it all out there and I get to really expose the dirty truths of these trading bots. This is an awesome video. Next up on the chopping block, quant trading. Well, this sounds super fancy. Boy, if I went into my bank and said, oh, what kind of trading things do you have? Well, guess what, Johnny? We've got quant trading now at ABC Banking. We're taking over. This is crazy. And I'm going to tell you why. So quant trading is basically quantitative analysis and mathematic modules. So think of this as superhuman speed. By the way, they use terms like rapid fire technologies or statistical arbitrage. We'll talk about arbitrage too. Don't you worry. High frequency trading is another term I've heard with them. Basically what this is taking those same indicators in this algorithmic trading formula that we made, taking it and applying quant computing to it, which is simply just trying to act faster and even quicker in the markets. And the reality is you don't have to act to the millisecond, to the split second. So an example of quant trading would be volume starts to come in on a coin and it can pick it up faster than humans can react. So it sees volume spikes and it's programmed to see maybe some of these different horizontal or vertical movements where it says, oh, there's interest here. We can react faster than humans because we can read the whole entire market and, oh, there's volume, let's buy. Well, there's a problem here. Volume comes in on a trade after the trade has already started. So prior to that volume, prior to these quant triggers, we'll call them, these things that would trigger quant trading, there was a trade that existed months before that, or weeks or hours or days. There's not some magical split second, millisecond moment that computers take over the world like Skynet is happening. And they all trigger at the same time, and which quant can beat which quant bot is the one that wins. This just simply isn't realistic. I'd like to point you guys to what happened with GME lately. If you haven't seen my video on GME, go watch it. It's kind of the same idea. All of a sudden, volume starts coming in on a coin that's hot, and quant trading flies, and rapid fire technologies are reading the markets on high frequency trades. So quant bots, kind of questionable. They don't really work. And I think you can see why. Again, they're all kind of sharing the same theme here, which leads me into my next bot. Before we get to the last bot, let's talk about arbitrage. Arbitrage bots are simply just taking the price of one coin or one stock and checking the price against all the other exchanges in the world. And if there's a spread of 5 cents, maybe it'll buy 10,000 stocks. So maybe brokerage A is selling a stock for 10 cents and maybe brokerage B is selling for 12 cents. Well, an arbitrage bot would buy it at 10 cents and at the exact same time sell that stock on the other exchange for 12 cents. Therefore, all day long executing kind of this command where it's making pennies on the dollar thousands of times a day, right? Big trading houses use this, institutions use this, and arbitrage has been around for a long time and it will continue to be around. It's not illegal and it is something that just has always existed in the industry. It makes 1 or 2 cents a day all day long on thousands of stocks, and that's it. Arbitrage is boring. Which you would consider now amongst the best and of the final bots. This would kind of be like the highest level or an elite bot. This is what I tried to create and what I strive to develop for the last 2 years, where you take an actual science, a proven method and a formula. And there's only very, very few traders out there who could actually pull this off. The science that's used in the markets, and then trying to take that science and allow it to trade for you. This would be above it all. It's where you could actually create the rules of the charts, right? So the deepest layer of science and put that into a bot. Again, that's what we tried to develop. So this one I have tons of experience with. Okay, Cotton, slow it down, back this train up. What about AI? Okay, let's talk about AI. I think AI is a very hot word to say. I think it's very cool to say, what about AI trading? And to know nothing about it, but to think that some machine is thinking for us and adapting in the moment. Let's talk about what AI actually is. So the form of AI that could be used in trading. Now there's different forms of AI out there. There's quite a few different forms. I believe there's 4 right now. Maybe I think they're working on the 5th iteration of AI. But the form that would be used in day trading is kind of the same thing that they use in cars. So let's talk about what AI actually does. Think of a car that has AI to help you hit the brakes when maybe there's a deer crossing the road. So what happens is there's a little camera on the front of the car and it is scanning the horizon all the time. And it's connected to a supercomputer out there. And it's scanning the horizon and all of a sudden, bang, it sees a picture of something crossing the road and it's a deer that's crossing the road. So this camera takes a picture of that. Now it doesn't know what a deer is, but it has a database out in the cloud. It has a database back at its center that knows what a deer is. So it takes this picture and at lightning speeds, it sends that picture back to the database and the database says, okay, is this a raccoon? Is this a house? Is this a pile of bricks? Is this dirty trades? What is this thing? Oh, I see what it is. It's a deer. Oh, okay, this is a deer. Oh, now the car knows it's a deer. And the car says, oh, we're programmed to stop if we see a deer crossing our path. Boop, car stops, lights go on, you're saved. Hooray, AI is working. So this is AI, it's pattern recognition. Although AI can learn and you can program AI to learn, you're still taking pictures of things. Now, how this would be used in trading, because we did try to work with AI and introduce AI into our form of the super bot. You would take pictures of like peaks and valleys. And now I'm not going to get too elaborate into this for proprietary reasons. Years of work went into this trading bot. That's never being released because it just simply didn't work the way we wanted it to. Another topic for another time, right? But you would simply take things like pictures of peaks and valleys and you would try to help the bot learn. And day after day after day, you would say, okay, you made a mistake here. Take a picture of this, learn how to avoid it. The problem with AI is that it's only pattern recognition. And if you think back to what we talked about with comparative analysis over here, how these rules are made up in the moment, these patterns aren't ever going to be the same. So when you talk about the highest level of day trading and how this adjusts every day, you may be able to train something for a week and it may be accurate in terms of AI for a week or maybe even 2 weeks or maybe even 3. But then something is going to change on the charts. Something is going to be used at a different type of level. And now saying 3 weeks, actually, when we go down to this 1, 2, 3 weeks, 3 weeks is actually a long time in day trading. I don't think any AI that we worked on could work past maybe a week, maybe even a few days, because the stuff is changing so rapidly. And it's not changing as in, oh, it's forever evolving. Think of this like a chessboard, okay? You have X amount of spaces on a chessboard. Now, every time, this is a magical chessboard, by the way, the pieces, they can still move in the same way. So think of the pieces as levels, trends, valleys, move. Just think of the pieces as the actual technical data that we use, okay? So the pawn moves here, that's a level. The rook moves this way, well, that's a trend, et cetera, et cetera. So the pieces, they will always move the same way. However, this is a magical chessboard, okay? This chessboard, when you move a pawn one space, or any chess piece in that matter, when you move it one space, the board expands one square out on every side. So now it's like, whoa, we have all, no longer do we have D1, now we have like D22, where you could take your queen and move it to a new block that just got generated in the moment. And then the next player moves its pawn and that board expands again. So every time that a piece moves, that board expands. And then it gets to a point after it's expanded maybe 100 sizes in length, and you could have like, I don't know, 500 or 600 pieces on each side of the board. Then it starts to compress down. And sometimes it compresses one block at a time. Sometimes the whole board just blows up and shrinks down right back to the square roots of what it works with. So this is kind of how day trading works at the highest level. It's the same information, but the complexity and the nature of how it evolves every single day is vast. It's huge. It's massive. It's taken me over a decade to figure this stuff out. And I'm a pretty smart cookie. So it's taken me that long to figure it all out. And that's how you have to think of day trading at the highest level. It's a set of rules that are expanding. And in the moment, this chessboard has decided how far out wide or how much it's going to get back destroyed down to its origin. So this is why AI can't work, because you can see a valley and you can teach it and say, oh, here's a valley. Oh, here's a peak. Oh, here's a level that's generated off this information. Oh, here's a trend that would therefore be generated off this information. All of a sudden that gets all blown out, and what AI has learned is completely useless, and it has to be retrained, actually to the point where the AI gets so accurate that it starts to reverse itself and it becomes completely inaccurate. So it's like amazingly accurate. Imagine you have a trade and it's like, oh, it makes 5%, 5%, 5%, 5%, 10%, 10%, 15%, 15%. And it does this all day long, okay? All of a sudden, bang, it loses every single trade because that chessboard was altered. So in theory, could you make the most elite form of a bot that works? Yes, you could. The problem is the amount of resources and time it would take to develop such a beast would be astronomical. You would have to start going right back to the beginning of this video, at the very origin core of this thing, at the very starting point of this thing. You'd have to start with the best trader in the world, feeding this bot information, and then understanding all the ways the data layers work in order to develop this thing properly. So can it be done? Yes. Is it nearly impossible? Yes. Is it impossible? No. Anything can be done. It'll be interesting to see the day that a bot so good comes into the industry that it's your handful of top elite traders versus the bot. Well, maybe they'll make a movie about it or something. I don't know, but it will be cool to see one day if it happens. So after learning all about bots now, I think the first natural question would be, well, Quant and Kent, I use a bot. You've seen them all. You've worked with a lot of these bots. You've got a great understanding of the way they work. Isn't there one that could just make me a passive income? No, not really, because you know what? The amount of risk you take using these bots is beyond ridiculous. Are there some bots that will turn profits? Yes. Are they reliable? No. Are you going to lose money using them sometimes? Yes. Is there any bot out there that can just say, oh, this makes me money 24/7. There's no risk. There's no flaws. No, actually, you could be a new trader. The way I would analyze, like the way I would cross-reference this is you have a brand new trader that's never traded a day in their life versus probably the most reputable bot out there. You take the day trader who's never traded a day in their life, and you take that day trader and you teach them for a week how to trade. They're probably going to trade better than the bot can, just because of the risk factors. So you have to kind of see bots like gambling. you want to risk some money and go see if it works out, go nuts. Be my guest. It's kind of like going to a slot machine with a bucket of quarters and saying, hey, maybe I'll hit it big tonight. Well, maybe you will, maybe you won't. Sure, if you go enough times, you might win once or twice, but for the most part, yeah, you're probably going to chew through that bucket of quarters pretty quick. It doesn't take much to be better than a bot. Bots, if you guys haven't noticed, bots come and go like crazy. That's because bots in trading are dying. There's not some big insurgence of bots coming. There's not some reshaping of the industry to bots. Imagine everything we talked about and actually having the people to develop that and put that into a bot. This is harder said than done. Other bots is the problem out there, not the kind of elite scenario. The other bots where it's algorithmic trading, it's quant trading, it's AI trading, it's indicator trading, it's signal trading. You know how easy those things are to breach in terms of security? You know how crazy it is to think that, oh, we're going to go and join like a signals group, for example, and have a signals bot tell us what to do. You know how easy it would be to actually break into that signal bot and just say, oh, Bitcoin's at 100K, buy as much as you can. And then Bitcoin dumps down to like 10K or whatever the scenario happens. The security behind bots is a whole nother ball game. Just keep in mind that not every bot or person out there really cares about the security of your information or your privacy or securing their bot. Sometimes they just simply care about making something that looks cool or, kind of works. Just be careful, I guess, is my words of wisdom. Don't forget to like this video and subscribe to the channel. And I hope you guys can understand why I say that bots are useless and kind of my take and opinion on this thing. You hate to say it, but you gotta do it. What's your guys' experiences with trading bots? I'm going to get hammered with, I tried bot X and lost money. I tried bot Y and it was cool, but it didn't work. I want to know what your guys' experiences with trading bots are. This is going to be terrible. This is going to be a nightmare. Why am I doing this? He probably lost so much money using that thing. Why would you do it? Oh my God. Don't do it. Don't use it. Please tell me all your best and worst experiences with trading bots. Until next time, adios.